Happy Monday, everybody. Today is April 25th, 2022, and this is your overdue Monday market update. Quick apology for missing last week's videos. They're the first videos that I've missed in the past couple of years. I hated missing them. I was traveling with my family for the Passover holiday, so please forgive me. The past few weeks have been filled with volatility, so I'll try to do a quick wrap-up of last week's action and then preview a bit of the coming week as we always do. I'm also going to try to do a separate short update video on the week before that, since I missed updating you on all that happened that week also. It'll be a separate, so if you only want to catch up to where we are now, you don't have to get a really long video. You get a short video for that and a short video or a shorter video for this week. Let's jump right in. Last Monday, April 18th, the real tax day. This year we had some back and forth action as the stocks digested the World Bank lowering the global growth estimates from 4.1% to 3.2%. So everyone was rightly concerned again about global economic growth in the face of inflation at 40-year highs. The S&P was down only slightly. We started to get more earnings, but nothing big enough to really move the needle. Oil was back near $110 a barrel, and as talk about the possible 1% rate hike bubbles up, the yields are still close to 2.9% of the 10-year. Tuesday was another bounce-back day. Strong earnings and oversold conditions in stocks allowed for some upside action. Meanwhile, the 10-year yield nearly kissed the 3% level, came back down to close a little bit below that, but is still something we'll keep watching. Is the bond market pricing in these rate hikes we're talking about? Have they already priced it in? Many think that's the case, and I happen to be in that camp as well. We also saw some stock-specific news, and Netflix missing earnings talking about losing subscriber. That's the first time we've heard that. We also heard it from Verizon last week as well. That did weigh on streaming companies. But as I mentioned, most of the other earnings were solid. The Dow and S&P 500 were up about 1.5% on the day. NASDAQ was up a bit over 2%. Wednesday brought another mixed day, with the Dow slightly positive, S&P and NASDAQ down on the day. Some more lack of direction from the markets. You can blame Netflix for most of that, as there's a part of the Dow and the NASDAQ. There was a slight pullback in bond yields, which did help keep from the selling getting too strong. We did see some amazing numbers internationally, really from an inflation standpoint. Not great, but amazing. Germany reported 30% PPI, and Canada's CPI was 6.7% year over year. Inflation is a problem globally. We got late reports that a Russia bond default was possible, and that did also weigh on things. Stocks gapped higher in the open on Thursday. Solid earnings news from Tesla and United Airlines. There was a quick bunch of selling into that strength as economic numbers did disappoint. Jobless claims were larger than expected. Philly Fed survey started the most recent talk about stagflation again, so we could not get too far ahead. ECB and Bank of England actions also started getting priced into the market, and Powell spoke again. The markets are even starting to price in a 75 basis point hike at the next meeting. Markets continued lower throughout the day. S&P 500 closed down about 1.5%. Dow was down by 1%, and the NASDAQ down by another 2%. Quick note on the earnings and the economic news. They are all, with some exceptions, pretty good, and many even are bringing along some positive forward commentary. It should be noted that this seems to be proof in the numbers that our economy is currently doing fine. The question has to be asked, how long will this last? With the upcoming Fed action, how long will it go? Or will the upcoming Fed action be less than what we're pricing in? The week ended with some of the worst trading in a while. As we know, on Friday, the Dow had the worst selling since October 2020, down almost 1,000 points at the close, or nearly 3%. S&P 500 was down, worst day since March, down 2.8%, and the NASDAQ dropped a bit lower, a bit over 2.5%. Company-specific news, earnings in most cases led the market lower. These stocks were punished if they disappointed, and there has been this move in the markets called TINAs, that there is no alternative. There may be a recent move away from that, is what we're seeing a lot of money come out of this market. As I mentioned, we are seeing both sides of the earnings reports. We're also seeing a lot of cautionary talk from the Fed. Even Jay Powell is out there doing it. This is what is a huge weight on the markets. Why do the markets keep whipping back and forth? I think you can just see the reasons in the conditions we're seeing right now. As I've mentioned, there are a lot of reasons to think that we're closer to the end of the selling than we are to the beginning of the selling. We're starting to see some green shoots that might look like inflation is peaking. We are hopeful, but not too optimistic on the war in Ukraine ending soon, and we just saw some negative news on that over the weekend. We'll also be seeing better comparisons soon from last year. Not to mention the fact that we find so often, given some time, companies find ways to work better with supply chain issues they have. Employment, still a major problem, but only one side of that's a problem because we have plenty of jobs. Those people who have jobs are making more money, put more money in their pocket, and now, at least for now, masks are off, travel's back on. There's a lot of forward momentum going on in the economy. The main issue is, of course, inflation. The only way that we see right now that the Fed will be able to address this is by demand destruction. Recall that inflation is just demand chasing a limited supply, and that's in its simplest form. The concern I have is that as we destroy demand, those sales go down, profits go down, and as you've heard me say over and over again, profits or earnings drive markets. So we'll have to see if this famous soft landing can be achieved. Let's look into this coming week, see what's happening. We're going to have over 160 S&P 500 companies reporting earnings. So hold on to your hats. This includes Amazon, Alphabet, Meta, Microsoft, Coke. There's also a bunch of economic numbers due out this week, the most important being the core PCI on Friday. Although I do think the cake is baked in on the Fed right now, we just need to see how data dependent they really are and how they follow through. Watch for a few Fed speeches as well. Another pretty important week. Recall that all of the selling off the bounce back and the bouncing back we have, we're still not where we were at the bottom earlier this year. We do need to adjust what we own and how much we own of it. There may be some rotation of investments necessary, so let's stay in touch on that. As we've seen, stay nimble, know what you own and why you own it, and let's make sure we always keep your goals front and center in the conversation. Remember a video from a few months ago. We have to separate the signal from the noise, and that's what we're going to keep trying to do. Keep in touch and have a great week.